Hi, good evening, all. This is SK. This is our new session where we do bar by bar recap of the day and analyze what we assumed, what we thought, what positions we take, and which positions we made money, and what was the reason why we were able to make money. Is it a setup which occurs every other day, every other week, every other month, or is it a setup which we made money but we were at the wrong side? We lost money but we were right. We took positions too soon, or we took profits too soon, or our stop loss was not right. So this is something to talk to yourself. More you reason to yourself, more clarification will you get your own self. Like, it's something like driving a car. Like, I can sit on a driving seat and I can teach you as much I can teach you as much as you want. This is the way we drive. Unless until you do not practically drive yourself, there is no way you will understand that. You will not get the confidence. You will not get the conviction on yourself. So it's something like driving a plane, or driving a train, or riding a bike. Anything, swimming for the first time. I can show you everything. Or going to a gym. Anything. So you have to do it yourself. You have to reason to yourself. You have to tell yourself that what is right, what is wrong, and what is the reasoning. So let's say this is going to be a little detailed today. Before the open of the market, I often look at few very minor things which I want you guys to have a habit of. What I'm saying is that we all are trading e-mini futures, nothing else. We do not care what Apple, what Facebook, what Google, what Amazon, Tesla, Twitter, or whatever they are doing. No matter, they can go to the moon, and they can go to the grave. We do not care. We're gonna make our money from e-mini futures. So first thing we look at is that the weekly chart. Before the market is opened, I look at the weekly chart, and I draw a few lines, which is like, these are the price targets which I often have. One target is the high. The top line is the 1876 is the high of this month. Then we have 1873, which is the close of last month. And then we have the next target, which is 1865, which is the low of last month. And then we have a support. Our support is 1803, which is the low of this breakout. From the breakout, we saw a big tail. This is the reversal. This was the reversal where we saw the bounce. So let's say, so we are prepared. This was not here. Like yesterday it was trading, today morning I believe it was trading somewhere around 1810 before when it opened. Let's go to the 5-minute. Sorry. Okay. I mean, we opened around, over here, where it is, like, we know we have some target below, which is 1805 is the support from last to last month, where we saw the buyers came in and they gave a very big tail at the end of a week. So at the end of the day, most important is weekly highs and lows. Last week's closes, highs and lows, and before that, highs and close. These are the few targets, which we see whenever we are at a certain price range. That price range becomes important to us, and we want to see what bulls and bears did last time. Are they acting the similar way or not? So today, this thing gonna play a very good role here. So we bounced, we saw a gap down at the open. What happened at the gap down? uh, uh, we are near the support. All the guys who have shorted the market, they are covering, they're short covering. So am I buying this? I will only buy this if it is above a 2 to 3 tick above the close, and I see the follow through with the stop with the low of the day. Next candle we saw this. It might have filled us here, we might be filled, but what happened? We are still holding our stop. So we want to see that if it took our stop or we see any bounce, we scaled in lower, and we'd say any bounce will take our profit. Or if it closed at the high, like high of the candle, will take 50% off or 75% off and move our stop somewhere here or somewhere here. Let's see what we have for the next candle. Next candle, we have it here. So right now, what if I would have taken these three candles, for me it's a trading range start, it's a breakout mode. Either bulls can break out to the up or bears can break out to the bottom. So what should I do? I bought it here, I got filled here, we close here, I scaled in lower, my stop is still there, my stop is still good here. Over here what I did is I have taken the profit. I have taken my profit and I have put 2 to 3 tick up. I have put the next order to fill. If it break out towards the upside, I'll get filled. If it break out toward the downside, I'm not in a loss. I'm not holding any position. So what happened? It filled me here again. It's a trading range. It's a trading range. Like it filled me up again here. Like I have my stop here. I will scale in a little bit lower. I'll go up. The reason is why I'm more bullish right now and not bearish, because bears were not able to hold the low. Bulls are making every time the next bigger high, next high. So bulls are trying for the breakout here. So you understand, this is a trading range. Either you can do two things here. Either you can draw a trend line here. You can always sell on the high and you can buy low, or you can buy low, sell high, or you can scale in lower, up and down. This is the price range which happens 1 to 2 times a week. When the beginning of a day looks so much in a trading range that it's difficult to understand. Like what people, most of the guys do when they say this, they sell this, they buy this again here, they sell down, they buy then. So it's not to be get confused. If you have your stop at place, even if we have long from the first candle, we have not taken our stop and we are going a little bit higher. So we saw this kind of a breakout here. Bulls were buying, bulls were trying. We saw this kind of a breakout. But with this breakout, one thing is for sure, this kind of a tail we do not want. The first breakout should look very aggressive. The breakouts were aggressive, they were trying. But over here, this is push 1, this is push 2, this is push 3 as well. So that means in a trading range as well, we saw with the breakout, what we're looking at is that they have taken some profit. Like all the bulls are taking profit and short sellers are selling this thing. As we are reaching to the breakout point, they don't want us to fill the gap. That's the second level of the study. Let's say like they're just selling it here. This tail. Just assume, you should see this kind of a tail and you should take your profit. You want to make money being a bull only if we go next leg up. If you're not going next leg up, you're in profit. Wait for next setup. For me, I would have taken my profit and I would wait for next setup to occur. Okay, we have this kind of a pullback, this is the third push. Let's say you're saying it's a breakout. From the breakout, is this a breakout buy? For me, it's a third push. I will not buy this. But few, they might say it's a breakout buy. It's a breakout buy with the stop 1821. If you're thinking we're going for the next leg up, more bulls will put a stop at the open, which is 1815. But what I want is, initially it's very difficult to control your emotions, and you tend to lose money if you do not manage your trade right. For me, it's a tail which is not a good tail. We didn't get the follow through, so it's not a buy. Trading range start, breakout, or you can say push 1, push 2, push 3. It's a failed push 3 and we get a deeper pullback. So what happened here? Over here again, bulls tried. Few bulls who have bought here, they failed here. We saw this kind of a candle. So this kind of a candle, we have seen so many times. We have seen this candle here. We have seen this candle somewhere here. This was the candle. This candle closing at the low, it always tells us one thing, that bulls were trying for the breakout. They were not able to take the high of the day. This is not good sign. This is not at all good sign for bulls. Bulls who have bought this, assuming we are getting the next breakout up, for this sign, they will take their profit or they will move their stop at 1825, just the low of this. If we get any breakout, they will reverse their entry. They will do whatever they want to do, but this is a very bad candle in itself, telling us that we are not getting a bull breakout. Let's see what we have to the next candle. Important over here, like what I will do, I will take my profit. But if I get a pullback, will I sell this thing? No, I will not sell this thing. I will only sell this thing if I get, uh-oh, damn. I will not sell this thing. I will only sell this thing if I, now it's very important, I will only sell this thing if it closes below 1822. This was the breakout. It has to come below the breakout point for me to sell short. For after the breakout, then I will look for 2 to 3 legs down. As of now, I'm not looking at 2 to 3 legs down. What I'm looking at is we failed here. Bulls are still trying. We are still above our breakout point, and we are still above our breakout point support, which is 1821. Next couple of legs, we see bulls failed very bad, but again, bulls have failed. Most of the traders should not be trading in this kind of a price action. It's in a breakout mode. We see these tails, we assume we are going for the next leg up. Bears see this kind of a tail, they say we are going for the next leg down. So there is no breakout until there is one. Remember, with the successful breakout, with a good breakout, with the follow through, with a breakout, we get 2 to 3 pushes. So there is no rush to take a trade. We will take only a trade when there is a confirmed breakout with a follow through. What is happening here? This was the breakout, but there is a follow through which is missing. So we are not buying this. We need a follow through. Breakout will give 2 to 3 pushes. Breakout with a follow through. There is no breakout until there is a breakout. This is a breakout, but where is the follow through? We are seeing these tails. Bulls are buying, but I do not have that kind of a courage. I do not like to put my money in a trade which is low probability and a low risk. This is stop here, but it's a very low probability. Let me take my stop. Let me put my stop here, but I want the trade to be higher probability, where the chances of winning is more. So I'm not buying this. Still, the breakout is not there. The breakout will come only if we go below 1822 or from the breakout point, which is 1824. You see 1824 bulls bought. So what happened here? You see this? This is the support. 1822 is the support. Bulls bought here. But have we got the breakout? No. After the breakout, there is a follow through? There is not a follow through. We were in a trading range here, and we are in a pullback trading range here. We are in a breakout mode. It's a time when most of us, we will lose a lot of money trading this. If there is a no breakout, we are not trading. We are not taking a trade, because every breakout will look so prominent that you will see it's going for the next leg up. Right now, I mean, like for a newcomer, he might think, okay, we are getting this tail. There's a bull body, like we have this bull leg, and we are going for the next leg up. But remember, we failed at the breakout, and there is no follow through. So there is no buy. There is no trade. There are few days in the week or a month when e-mini futures makes you little bit. It becomes a little bit boring because there is no trade at the beginning of the day. Most of the day we make in first hour, but as of now, it's not the time to make money. Like we are looking for next leg up, but what if we didn't get? There is no breakout. So we failed here. You see, bulls bought here, over here, and we failed back down. We failed back down. Right now, we closed below 1822. So let's say, who got the breakout here? Answer yourself. Did bulls have the breakout or bears got the breakout? Over here, bears got the breakout. Bears got the breakout. Now what we need, what we did here, when bulls got the breakout, we bought here for the scalp up. When bears got the breakout, we will gonna short up, but we're gonna see the follow through. This follow through was missing. This follow through was bad. This follow through was very bearish. Let's see if bears can get a follow through. Will I short this? Yes, I will short this with the stop here. Reason, we got a breakout. We bought this, thinking we are going for the next leg up. Similar way we short this, thinking we are going for the next leg down. Is this a breakout follow through? It is a breakout follow through. Bears are closing to the bottom of it. Over here, bulls failed. Bulls didn't close at the high. If bulls would have closed it near the high, also above this candle, I would have taken this long. But what happened here? With the breakout, bulls came, but bears closed, even took this low. So we are going for next leg. Any bounce here? So for me, this becomes push one. This becomes push one. Near the low of the day, we saw this kind of a bounce. Will I buy this? I will not short this. I will only short this if I see some kind of a follow through to the bottom with the second entry. Right now it's very confusing. It's looking like it's going for the next leg up. But I will not short this. I will not go long. I will not short this. I will let the market to do something which makes me say that okay, we are going towards either one direction. Right now, bulls and bears both are trying to make their day, and we are back to the normal. What happened yesterday? If you remember yesterday, we were here. What happened here? Like we saw this kind of a price action after we saw bounce. We came back around 11 o'clock where we started. We make an indecision candle. So what's happening now is. What's happening here now is if we are about 10:35, we are making an indecision candle. Like it's all after the hour candle. First hour candle is giving us a tail at the top. So that means the traders who are trading hourly chart or traders who are trading 30-minute chart, they have seen one bull bar and a reversal. For hourly, they have seen a tail. They have seen the tail on the top. So what will they do? What they are thinking is we are going down. But at the next leg we saw this kind of thing, 10:45. Still we are at the open of the day. We are at the breakout mode. Are we taking any positions? No. At the low of the day or the high of the day. High of the day, we often see a lot of pullbacks, and low of the day, we see the bounce. That's the bounce we're seeing here. But we need a second entry long to be long. If we do not get second entry, it's still a bear trend. It's a bear watch. This is what we saw. Is it bear? No. For me, maybe traders will say we are in a trend. We are in a tight channel. We should short this. It's not breaking above. But what I'm trying to say is that there will be 100 different setups you will see every minute. But will you take every setup? No, we are here to make money with few setups. Sooner or later you will make money in every candle. But why to challenge, why to confuse, why to lose our money when the setup which we do not want to trade, which we are not 100% sure, which we are not highly convicted, that we are not convinced highly that we're gonna make money off, why to trade that? So this is a follow through. Now we have taken the low. We are about to take the low of the day. If we take low of the day, that's a short for at least one leg down. You see what kind of bounce coming at the low of the day? But it's becoming more bearish. Tail, bear. So right now, what I will do is I will put my limit order 2 to 3 ticks below this candle here, the low of the day. I'll put 2 to 3 ticks low. Most of the times on my Twitter account, I put low of the day watch. So that is mean what I'm watching. I have already put my order 2 to 3 ticks below. If I get filled, my stop will be high of this, which is 18.20, and I'll go for the next leg 2 to 3, 4 scalp. This is what we saw. What happened here? We got the breakout. I got filled, or you got filled. Whoever we got filled, our stop is here. We will see if we get any bounce, it's a loss, or we can scalp. If we just would have taken a scalp, so we would have made almost 2 to 3 points, So we saw a follow through, we saw a follow through, so it was a shot. So this was a good low of the day. We saw this kind of pressure, we saw bears are coming, we saw these tails, so we did not take position at this candle, but we put at the close of it, we put 2 to 3 tick limit order to get filled. Once we got filled, we have a stop above. This is like, this is 60-40 or 70-30% ratio that you can be a winner or you can take a small loss. But at the end of the day, the probability is towards your side. Probability tells us that we will be making money. So the next bounce will be a short as well. This is closing at its high. What I would have taken how I would have taken this guy is, like as it's closing its high, I would not have shorted this guy. It's a risky trade. I would have shorted this guy if I would have seen some kind of a tail at the top, tail of the top. But over here, bulls are back in the picture. They are trying for the breakout. They are looking at 1, 2, 3 push down. This was the breakout. This was the push 1. This is push 2. This is push 3. After push 3, they are looking for the next leg up. So this is what we saw. We saw that they tried to do the breakout with this candle, but the breakout failed. The pullback failed. The third pullback failed. We should have got a deeper pullback. And the other thing is, after this pullback failed, I will draw this kind of a trend line here. This trend line will tell me that something, a few computers are taking this trend line as a trading mark, like they are shorting with this trend line, and we are closing below this. So now what I will do is I will only go long if we go above 1816, close well above 1816. You see, bulls tried to break out this trend line, but bears put them back under the trend line. So there is no long unless or until we do not get a next leg which closes above the trend line. We need to close above the trend line for a next entry long. We close above the trend line, that will not be a long. We will wait for second entry long. So what we saw here, the breakout failed. We are below. This is the follow through. They took the low of the day. When they took the low of the day again, this was the short for 2 to 3 scalps. We shorted here, we covered here, we make about 3 to 4 points. So what 3 consecutive bear bars? This tells us now bears are becoming in a very strong price. So this is 1, 2, 3. 3 bear bars. After this, we saw next leg down. Similar way, bull bar and 3 bear bars. Very similar, you see. So what we gonna see next? Any bounce, I will short because I have 3 consecutive bear bars closing almost near at the low. We saw the bounce, but this bounce is above the trend line. Will I buy this? I will not buy this. I just told a few minutes ago, I will only buy this if it gives me a second entry. This is the first entry. I need a second entry. Second entry will be 2 to 3 ticks above this when I get filled, or we get a pullback and next bull bar is a buy. Is it a buy? Yes, I will buy this. I will buy this. I'll put my stop somewhere around 1807. And I saw this. Will I buy? Will I still hold my position? I'll scale in lower. I'll still hold my position. My stop is around 1806, 1805. I will take my profit out. Reason. Right now, we made our profit. We scaled in lower. We scaled in about lower, and let's say our average price was 1812 or 1813, and I take 2 to 3 points here. After this, what I will do is I'll put a limit order above this, or I will see for the next pullback, make a good base, and then I'll buy. we got filled. This is what we are seeing. So right now, this is the price action, what we are seeing, but these tails are making me hesitant to go long. Reason, these tails means that bears are trying to short, bears are looking strong. They might be looking at 18 as a double top reversal and go for the next leg down. What's the time? Right now it's around 12 o'clock. Personally, I do not like to trade 11:30, 11ish to 2 o'clock. That is the time when I have lost most of my money. That is the time when I have talked to most of the traders, those who lose money. That is the time which Mr. Al Brooks often mentioned in his email or mentioned in his interviews, that this is the time that most of the traders lose money. I do not want to notarize this statement that, like this time most of these traders lose money and we shouldn't trade. If you want to trade, you can. Personally, I do not like to trade this time. This is the time when most of us, we lose money. So let's say, we're just going to fast forward this. What's happening? Like we had tails, we saw the pullback, we're still above 1807. These tails are giving us a sign that we are getting a pullback, but we are near the close of the day. This is a trading range. This is a time when most of us, we can lose money. I do not like trading this. I simply do not like trading this. It was a buy. Like it's a simple buy. You can see we are going up. We can buy, stop. We saw the resistance which is above this 1819. So 1819, we are not closing here, so we should sell this. We can see the next leg down. I do not want to push this time of a period to trade. This is not a very, very good time to trade. Like this is a time when we can lose money. Honestly, I would have shorted this, like assuming that, like we failed here with the double top, and I would have lost money. This is the time I do not trade. And this people would have bought for the next leg up, right? That it was looking bullish. We're going for the, if you just look at this, how deceiving it can get. This candle, it looks like, we are failing at 18, 19 and we're going for the next leg up. These candles with this thing, this is like a bull breakout. We are getting a bull breakout watch. And next thing we see is a reversal. So we are already telling our mind emotionally we are towards the bullish. We're trying to buy lower. Trying to buy lower. This is what we saw again. This has happened. Okay, we're going for the next leg up. We are breaking out, but we are at around the time 12, 1 o'clock when most of the things which they look like, it's all deceiving. It's totally deceiving. So this is what it follows. I personally would not trade this. Now this candle here, what is this? This is a candle where low of the day, we cannot close below the low of the day, which is 1807. The low was 1805, but we could not close below the low of the day, which was 1807. And this line here is from the weekly chart when the buyers came in the picture. After this candle, so aggressive, closing at the high of it, I am buying for any reason. This is 1818. The stop will be about 10 to 12 point stop. What should I do? If I'm buying 10 contracts, I'll buy one. I am buying. I'm scaling in lower. I'm just going. I'm going with the flow. This is simply a buy. There is first pullback is getting bought. All the bulls are buying the first pullback. So this is the first pullback. I bought this. What I would have done here is, like as it's an emotional decision, I would have bought here. I would have scaled in lower. While it went up, I would have sold. I would have made my money in this 5 minute. And what would I have done was, I would have put a next limit order to fill me up above this candle or close of this candle. Fill me up 2 to 3 ticks up with the stop, which is 1812. With the stop 1812, I'm still looking for next leg up. I'm bullish here. And this is what we saw. With this, I will take my profit. What I'll do is, if we go up, I'll put a limit order. If I get filled, I'll go for the next leg up. If I didn't get filled, I'll wait for the pullback to come. I get filled and I'll take my profit. What should I do with this pullback here? I'm sorry guys. With this pullback, there is one thing to be noticed. It has taken the low of this, which I normally do not like. So what I will do is I will only buy if it closes, if it fill me up above the close of the candle, which is 1825. I will put my limit order to get filled 1827 or 1828 for the next leg up. So what happened here is if I put 1825, 1826, 1827, it would have filled me up. I would have scaled in lower. My stop is still at the breakout point. You see at the breakout point, we saw again a bounce. When the big candle comes, this kind of a candle, 10 point candle, trade very small, but you should trade. This is the time, I highly recommend to trade. This is way bullish. We are not looking at the low. We have seen this trading range. We have seen the bounce twice before, a couple of weeks before we saw the bounce. Now we are looking at the bounce. I am going for the next lap. This is push 1, this is push 2. I am buying this for any reason, with the stop still at 1812. I am going long. This is what we saw. If I would have scaled in lower and all that, I would have taken my profit. And we are almost at about 2:30ish, is the time when we might get another breakout. You see what's going on. We're getting ready for the next breakout. We're buying this. We put our stop limit order above this. We get filled. This is wow. During the start, we were not making money. I would have not even traded during this half. This rectangle, I would have not made any money. But at the last couple of hours, I would have made so much money, and I covered all the things which I missed during the daytime, during the early hours, So same setups happen. Same setups definitely. This is the third push. We will see some kind of a deeper pullback. And we saw the deeper pullback. So guys, this cannot get more simpler than this. Just tell yourself you will only trade first couple of hours and couple of hours at the end. In the middle, you will not even look at it. You'll take a nap, you'll go out, watch a movie, you spend some time with your kids, you spend some time with your family. If you're off hours from us, if you're in Europe, I have so many friends from Europe. If you're in trading from Europe, just go for a dinner, eat some good food, just relax yourself, come back, go for a walk, whatever, do something, but you will promise yourself you will not trade. This thing, once in a blue moon, will give you 10 point, 15 point, 30 point. You will lose that and you'll come back, you'll say, oh wow, I should have been here, I would have made money. It's okay. There are 5,000-7,000 stocks. We cannot make money trading every stock. We cannot make money from every move. It's okay. We are here to make good living out of it. We are here to get financial freedom. We are not here to bring our ego in it that, oh wow, I missed this, I knew this. No, it's okay. Couple of hours in the start, couple of hours in the end, and we are good. We will not trade. Commit yourself. Promise yourself that we will not trade, and I promise that I will share everything what I know. I will share everything what have made me today, what have made me such an independent guy that I can say, yes, I am financially free, touch wood, with God's grace. I can take any vacation with my family, work for an hour and two, I make good living. But I'm a simple guy, I stay with my family, I'm a hermit, I do not like socializing too much, but you guys are my new family now, so I really want you guys to put time towards it. You do not need newsletters, you do not need nothing. I have already made my website, but to operate that is gonna cost and everything. I want to bring my website out free of cost, or if there is a cost, there should be very less cost. It should have meaning towards it. It should bring some results in your life. So I thought to myself that let me put at least a few months towards it, so that I can teach, I can bring that revolution between us, that yes, we can do it and we will do it. Thank you, and I'll see you tomorrow morning, guys. Bye bye.